CRTD currently finding rejection from the resistance range we actually talked about yesterday, Thursday. So let's go ahead and find out exactly what could happen for price action in the coming sessions. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a CRTD, technicals, raw price action, and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa. With that said, let's go ahead and dive right into the charts. Okay, so we are looking at CRTD in the 4-hour chart, and yes, we actually made a potential resistance range yesterday that consisted of the one spot 618 at 90.70, 90, just almost 91 cents, and the one spot 272 located at 80 cents, 80.11. Okay, so we actually did face that rejection, and we have since retraced. Okay, so now the retracement was kind of heavy, yes. The potential could be that we came back to test the newly converted resistance into support from our previous demand zone that we've been looking at here for quite some time. If I can zoom out, you can just see exactly what I mean by that. So yes, this is looking like it could potentially be that. Okay, so if there could be another downside continuation, it would likely be to test that support and continue on to the upside. Okay, so usually when we're looking at candle analysis, just the basic candle analysis, when we print a hammer like this at the top of a trend, usually this hammer indicates a potential pullback. And in this case, it is the 4-hour chart, so this pullback could be limited. Okay, but nonetheless, it's still looking bullish to me, even if we have this one candle here that could potentially do this one test back here. So in other words, is what I'm trying to say is that it can be doing this number here. Let's go ahead and make a quick little drawing. So we came back and we tested that one spot 618. We come back and test this thing down here. We move up, we test the resistance range of this little gap that actually consists of a candle from November 25th, the wick low, and November 28th's wick high, okay, creating this, let's see, how big is that gap? 103.75 to about 106.12, okay, so about a 3 cent gap there. We can actually come back either at the bottom area of the support or the top area of the support, likely to test that before coming back and testing the one spot 618 as a form of support, and then continuing on to the upside. Okay, so that could likely be something that can be happening here. We would need to obviously, verify this and back test it and all that good stuff, but the back test has already been done, and this would be essentially that analysis now. So let's look at the backtest for the statistical values. Okay, so new viewers, new listeners, what you're looking at here is volatility represented by this indicator BBWP. Volatility is direction neutral. So in order for us to get a bias for that direction, we actually pair it with an indicator called stochastic momentum, which is proprietary to TradingView software, which, by the way, the link is, my affiliate link is actually down below in the description if you would like to create an account with them, as that would actually help me. Okay, but with that said, let's go ahead and continue. I don't want to shill any much more so on that. So now the reason why I'm pointing this out is because we did get the firing of a particular signal that does signal a potential upside, and the upside is very desirable. Okay, so first of all, let's go ahead and touch on the criteria of the backtest. Okay, so we're looking at volatility versus momentum profile backtest here. Okay, so which usually consists of any time that that volatility has actually met or expanded into the critical volatility zone, which I consider to be anything above this red trend line where my cursor is over, is a red trend line here. So anytime that we have expanded into that critical zone and have started a contraction phase to the downside, I've actually taken note of that iteration's duration. The iterations, in this case, hold on just a sec. Man, in this case, we actually took the iteration's downside thrust. Okay, so what the statistical value is also comprised of however many times volatility versus momentum have gotten that downside correct versus incorrect. So in this particular instance, you can see that many a times, well over the red iterations, the downside has been correctly guessed. So in this case, yes, we met that we met that 90% critical zone, and now we're starting that contraction phase, which is usually signaling a downside continuation. However, this actually the reason why I'm saying this is because this actually may be the iteration to where we make the third incorrect iteration of the downside, making I'm sorry, yes, it would be the incorrect iteration as number 3, flipping the script entirely just to put it into a short story, just making a bullish move because momentum, the averages are actually pivoted towards the upside while we're contracting. Usually when this happens, an upside move is likely. Okay, so the firing of the signal actually happened right over, let's see, when we started pivoting right outside of here would be this candle here. So this is when the signal fired that volatility is loading, and it has since now corrected. Momentum is now suggesting an upside. So just for your information, I've actually backtested the momentum oscillator in several other tickers, many tickers, and the average read I'm getting for accuracy and guessing that upside direction is actually about, let's see, 75 to 91% in guessing the asset's direction. So we have to take this into heavy consideration, especially since we're on the daily chart, and that, I am definitely putting some weight on it. So now the back test I'm going to be running this weekend is actually to find out exactly how high it can go. Okay, because the back test of the decline that we caught from back here in about November 22nd did actually happen, and it happened right to the statistical value with the closure of this candle here on November 28th. So it did take some days to fulfill, in a lot faster than the average 77.23 days that it recommended. Okay, so let's move on to the next chart and see what kind of direction we're facing. Actually, one more thing within this that I'd noticed. Another thing of candle analysis here is this. Okay, so this is definitely a shooting star. This shooting star doji usually presents a bearish type of formation, okay, and this usually signals a downside coming in. It could potentially be a slight pullback before a recovery, but we do have to keep this in mind. Another thing to notice is that right down here, the volume profile, you can see that the buy pressure actually decreased just a little bit with today's buy action. So we could potentially face a short-term pullback, but we still have to. We still have to validate that, since we do have the 2-spot 618 located at about 70.24, and our current position on the daily chart, which is not reflecting any after-hours market activity, is 73.50 at 73 cents. Okay, so we do have a relevant support at the 2-spot 618 at 70 cents. So we could look at that for. I mean, honestly, it may actually surpass that to be, perfectly. Blunt with you. So let's just see if we take an inverse fib, between the 1-spot 272 at 61 cents and the 1-spot 618 at 54 cents, that could be a likely area for support. So I'm going to go ahead and draw that in, as I do believe, or I do feel that it may actually land around that area there. So let's just load some SMAs and see if there's anything in confluence with that. So we actually do have some confluence. The 100-day simple moving average is smack in the middle of the 1-spot 272 and the 1-spot 618, 54 to 61 cent range. Okay, so and now if we load up some exponential moving averages, we can also see. The 7-day exponential moving average it's fairly close enough to the 1-spot 272 at 61.66, so that could likely be a form of support as well. However, we do have to keep in mind the 1-spot 618, as it is a golden mean, and usually the trade or sentiment likes to take trades down, or price action down to those levels or up to those levels. Okay, so now let's go ahead and move on to the next chart. This is going to be the divergence chart. Okay, so a divergence is usually the opposition of price action versus momentum. And in this case, momentum represented by this indicator RSI, relative strength index, very, very typical indicator and very popular to use. Okay, so we are looking at several drives of what is what is considered to be regular drives of bullish divergence. So in this case, since so many of these drives are actually having the cross price action to get from point A to point B, these would be signified as phantom drives of regular bullish divergence. So we have many of those drives and have already started that upside. I'm sorry, this is very distracting. My apologies. Okay, so now to touch on a very simple fact down here, this is looking pretty good for the CRTD asset, in particular to the 12-hour RSI. Okay, so the 12-hour RSI has since crossed above the moving average, represented by this pink line, and the RSI signal line is the purple line. Okay, so it has, and this trend line is actually supposed to be here, and so is this one, which I believe we were just moving yesterday and didn't finish it today. So we have made a bullish cross above the moving average, and now we have approached what I actually want you guys to look at this here. My goodness. Let me just make it a little smaller and then correct my window a little bit. There we go. So yeah, I want the new viewers to actually hone in on these 4 zones as they're located right over here, just blown up for your convenience. Okay, so yeah, so the RSI signal has reached the shallow areas of the bear weakness percentile, which is right in here, and that usually signals a gravitational pull into the following zone. In this case, the following zone would be the weakness percentile of the bulls, so bull weakness percentile. Okay, the pivot is still to the upside. It weakened a little bit, but it is expected. So this is also the weakening of the pivot is also in accordance with the drop in buy volume that we actually caught on the daily chart, I believe. Yes, on the daily chart right down here, we were talking about the volume profile losing a little bit of momentum. So that's in accordance with that. So it's still looking very bullish, especially that we're in this shallow area of the bear weakness percentile. Usually that gravitational pull tends to happen. Okay, so now let's go ahead and open up a multi-pane so that we can gauge a closer bias for that direction in the coming sessions. Okay, so we're going to start off with the 30-minute immediate short-term time frame, and it is suggesting a continuation to the upside. Let me just zoom in, and you can see exactly what I mean. Okay, so the pivot is actually right there. There's a couple bad things here. The fact that we do have the 14-day moving average above us, and the fact that we're at this junction here. So this means that, okay, there's good and bad news to this. Okay, it's visual for me. I tend to see these things as I see it playing in my head. I can't exactly explain it to you, but let's just make a couple little lines here. So let's just assume that the moving average is going to continue down in the trajectory that it's currently on, and the signal line is going to continue upwards because it is well within the, let me just draw that purple so that you guys know what I'm talking about, and I'm going to make it real fat. Okay, so, and now this one we're going to draw as a pink line, just like the one that we have here. Okay, so usually when this happens here, first of all, we're in the deep areas of the bull weakness percentile right in here. Okay, so that usually means that we're going to be gravitationally pulled into the bull strength percentile. Okay, so the bad thing is that the moving average is above us. Okay, so we can actually use that moving average as a form of resistance before us finding continuation to the way down. So this is something that we don't want to happen. Okay, so I'm just expressing the warnings that we can look at. But another thing to consider is that we're very much in the immediate short term. This is the 30-minute time frame, so this is likely to play out fairly fast. Okay, and now let's look at the bi-hourly time frame. Bi-hourly time frame is suggesting a continuation to the upside. It is very much above the moving average, which is located all the way down here, and the pivot is not as strong as I would like it to be, but it's still very much within the deep areas of the bull weakness percentile, which is again usually is usually a signal of a continuation to the upside and a gravitational pull into the following zone. Okay, so 6-hour RSI is, the moving average is giving us a hint that we still have upside continuation. The pivot on the RSI signal is slowing down just a bit. So this is in accordance to what I'm talking about within this chart here of a potential pullback once more to test the newly converted resistance into support of the prior demand zone located between the NOT 618 at 60 cents and the NOT 786 at about 65 cents. There is also a moving average in that area, I believe. So let's go ahead and pull that up, as I don't quite remember. Yeah, the 7-day exponential moving average is actually in confluence with the top of the demand zone. And the demand zone is also located due to prior price action, like this candle right over here. Okay, so the candle is actually dated on, let's see, December 1st, 2022, this year. Okay, so now let's look at the last time frame. So this is the daily time frame, and the one that I am actually keeping an eye on. As you can see, we've actually retraced back to meet the moving average, and we have since used it as a form of support and now suggesting a continuation to the upside. Very good sign, since we're in the very shallow areas of the bear weakness percentile. This is usually that where we face that gravitational pull right into bull weakness. Okay, so this is definitely suggesting upside. And this is not the daily time frame. My apologies. This is the 5-day time frame. So let's go ahead and look at the daily, just in case there is a change in that. Daily is suggesting a little bit of an upside. However, it is neutral in direction. Bi-daily is suggesting the upside. Okay, so we could actually face some more upside on the bi-daily RSI before finding resistance at the moving average. So which means that it's likely for us to find this. It literally means exactly what you're looking at here. So I'm not God, and I don't have a crystal ball or anything like that. But what the charts are essentially saying to me is that, let me just get these moving averages out of the way. There we go. So yeah, what the charts are essentially saying to me is that we're going to face an immediate short-term pullback followed by a continuation to the upside, and facing a pullback and then continuing. So this is literally what I'm seeing based on this. The 6-hour looking like it's slowing down just a little bit. We have the resistance range on the 30-minute. We have the continuation on the 2-day, which essentially gives us the overall upside trajectory. Okay, so please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Please do your own DD and everything will be okay. All right, so if you have any questions or concerns, don't hesitate to reach out to me. I'll make sure to leave the links in the description below for you to consider joining the ARCa training community in Discord. But with that said, I think this is a pretty good place to leave off. If you have any questions or concerns, you know what to do. All right. I wish you well. I wish you a good night and a very good weekend, and I'll catch you at the bell on Monday. Adios.